Hey, what's up, everybody? Welcome to another edition of this yet to be named section where we talk about NFTs, the Metaverse, VeVe, McFarlane, DC, Funko, whatever. I gotta come up with a name. But anyway, today's video is going to be about sales taxes. I know, sounds boring, but um, this is one of the what I believe going to be extremely big issue in the coming years with various NFT projects. You'll notice that some um, of the companies that sell NFTs and mint NFTs charge sales taxes, and others don't. So there was a discussion that I kind of got involved in on Twitter that said, well, they don't need to they don't need to collect sales taxes because there is no nexus. But the question of nexus is actually a really old question. And speaking from experience, because we have a business that sells collectibles in the internet and physical space. Which we've been doing for many years. We actually had to change our policies and strategy regarding this. So here's the issue, and I'm in my spatial space here, and let me get close to it. Oh, my little head's blocking it. But the key thing happened in June of 2018. The Supreme Court issued a decision in South Dakota versus Wayfair. So basically, I'll read what this decision is, and I'll read it exactly. So, and I'll post a link to this PDF or this document in the description below. This decision overruled the physical presence rule for sales tax nexus for sales made over the internet. States now have right to require tax collection from online retailers and other remote sellers that do not have a physical presence in their states. So why is this an issue? So this is, and we're speaking specifically for sales made in the United States. Now, this is an issue because of the fact that all sales made over the internet, the seller is required to collect sales tax. And the interesting thing is that this differs from state to state. I'm going to leave my spatial space to go directly to the state sales tax chart, which you can see here, and I'll also post a link to it below. Every state is different. So I'm in Hawaii, and here's what Hawaii's regulations are. So for example, this is the key one. The threshold is for Hawaii is $100,000 or more, or 200 or more separate transactions. This is per month, I believe. So for Hawaii, when was it effective? From 2018, starting from December 1st, 2017. So you can see all these states are different. Kansas is 2021. So let's get back to my spatial space. So now why is this an issue? It is because that as states go after more and more companies, and I can tell you for a fact that Hawaii has, and as they go after more and more companies and settle with more and more companies, there's a liability. So these companies will have a liability for sales made to various states in the US. So let's talk specifically about VeVe. So VeVe is an interesting scenario, and I don't know the answer to this, but I'll just state the scenario. It's because the interesting thing is it's because the fiat, the currency, is actually to buy gems. So the sales tax, based on this Supreme Court decision in the United States, would be towards the purchase of gems. But the big question is, what happens to transactions in the marketplace where gems are like a almost like a stable coin equivalent to a dollar? Do those transactions in the marketplace also require a collection of sales tax? I have no idea. But for VeVe's sake, I would hope not, because that would be enormous. Because you can imagine what the liability is. Because it was reported that there were 1.2 billion dollars in transactions that occurred in the marketplace. So why this becomes a problem is if it is ruled that they are liable for state taxes there. Why it will become such a huge problem is because VeVe didn't collect it. So one of the things is didn't collect the sales tax as part of the transaction, and for the payment of the liability, that's not an issue. So, for example, in Hawaii, if you if you sell something for $10, you have a roughly it's actually more, but it's a 4% general excise tax, the sales tax. So the sales tax rule in Hawaii is that if I sell something for 10, I have the right to charge an additional, actually 0.04712. Actually, kind of any amount, but that's the generally accepted amount, which I then pay to the Hawaii State Tax Department. Now, I can choose to sell it at $10, but I still have to pay the sales tax. So I actually sold it for less. My sale price on the good would have been $9.55. The tax would have been 45 cents. So there, most states had a grace period, like that they could negotiate with the various internet resellers, and what happened is they came to a settlement, and it's like an amnesty period. So this problem is not just for VeVe. It is for various companies in the NFT space, or actually in the digital space that are selling digital goods. So this is going to be interesting to see how this plays out. You'll notice that if you go to some companies, like if you go to DC, they're going to charge you a sales tax, and they're going to charge you various fees. But this is going to be interesting, and you are seeing companies take different turns as to how they're addressing this, and regulation and oversight is coming. So if you're an investor and a collector, I would pay attention to stuff like this. So this is my little talk on the effect of sales tax on the sale of digital goods on the internet. Again, I'm not an expert in this field. I am a reseller there, so I have had for our company previously, we've had our accountants and lawyers look at it. So like, again, if you go to eBay and if you're an eBay seller, if you're a TCG player seller, you got to pay that tax, and we do when we sell it. So pay attention to this issue. It's going to be an issue in the coming years for this whole space. I hope this is helpful, and please leave a comment below. Again, I like to interact with you, and I'm in my spatial space. I've added a couple more villains here. I've added Vader, and I've added Mr. Freeze. So, thanks for watching and aloha.